Hey everyone, it's Ed Kime from over at Quantcha, and in this video we're going to take a look at our new stress tester feature. The stress tester provides everything you need to run what-if analyses across your entire portfolio for any of the scenarios that might be keeping you up at night. For example, you can go in and set a target date in the future and project what you believe the interest rate might be, or at least one that you want to model for. You can also go in and specify the expected spot volatility for the underlying stocks, as well as the price that you expect those stocks to trade at, or at least that you want to model for. And we'll take all that information, we'll throw it against your current book, and we'll say this is what we project the volatility to be based on the IV change. Here's the pricing we expect. Here's the market value of the position, and of course, included are the naked margin requirements if you're trading with uncovered positions. Now, by taking all that stuff together, you'll be able to feel a little bit more confident in what to expect if some of these scenarios come across, whether they're big jumps, big drops, big vol changes, and so forth. Now, it is designed to quickly gauge how these different market changes would affect the portfolio. So we include some presets for typical test scenarios, such as saying, well, what would happen if everything dropped 10%? Or what would happen if there was a 2 volatility rise in the underlying, or if volatility dropped by half, or if it doubled. All of those things are kind of baked in. Of course, you can manually edit anything you want. So you can really test any scenario you want for a given date in the future. It'll go through, it'll take those positions you have. If they cross expirations, it'll cash settle them or simulate a cash settlement, and then finally give you those final numbers that you're looking for, just to see if you've got the margin on hand that you need, as well as what your underlying your total changes should be. You also have access to easy things like managing the book or creating alerts, or even things like assignment alerts, so that you'll be able to use Quantcha alerts to be aware of some of these changes before they happen. Now, this is designed to complement the book manager functionality. So we have a book manager, which is one of our coolest features because it enables really deep analysis of a single book, as well as the ability to experiment with the holdings you have in that book to see how it would impact all the holdings and results expected for the underlying that you're targeting there. The stress tester, though, is sort of taking that up a level and saying, what if we wanted to see what the expected results would be in a breadth analysis of the portfolio for things like the option driving factors, such as your bringing in the underlying price, the volatility, interest rate, and so on. So now, let's go ahead and take a look at the product in action. And of course, it's available for everyone. So if you're subscribed, you get the stress tester as part of your Quantcha subscription. So I'm here on the dashboard, and I'm going to go ahead and click through to my portfolio. And I've got a simple paper portfolio set up here. We've got kind of a bearish position, a little bit volatility driven for GameStop. I've got a covered call for Microsoft and a debit call spread, so a bullish call spread for Tesla. And now, ordinarily what you do is you'd come in and take a look at the Manage Book feature, and I'd be able to see, all right, this is what I'm projected to get for the GameStop position, depending on the underlying on that date. I can move forward to another date and see that, and of course get all these features. And this is great if you want a breadth analysis to understand sort of that three-dimensional view of a specific date. But a lot of times what you're really looking for is a much easier to digest scenario that says, let me go take a look at the whole portfolio. And this is where the stress tester comes in. So it's from the drop down, and you can get to it from pretty much anywhere you're accessing a portfolio. And in this scenario, you can see it's the same positions we're holding from the portfolio, same view. Only in this case, we've got things like the target date, and I'm going to set this to be, we're going to go out to, let's say, March 18th, which is between the expiration of a long leg we have and a short leg we have. So this is March 18th, and by then, perhaps we might see a rise in the interest rate to, let's say, 50 basis points. And you'll notice these subtle changes here. Like as we tweak these, like maybe we get a 50 basis point rise, we can see that would impact it a little bit more. Go back to just 25 basis point from the current day, and so on. And we can see the different results as they lay out. We can also see volatility. This will change as we move from different dates because it's using the spot volatility that's projected from those dates in the future, depending on what options we have available. If we reset it, we can see those numbers will move around. So now let's try one of the presets. Let's say we want to see what would happen if we saw a 2 vol underlying drop. So that means it's going to take the volatility for the term that's expected and say, all right, between now and then, a 2 volatility drop for GameStop from 123 would leave us with an underlying price of 55.23. And we could see in this case, like, it wouldn't be very good for the portfolio. And of course, that's the kind of stuff you want to know. Now, let's say, for example, we came in and we had more specific views of what we expected. Like, for example, we think that GameStop volatility is way too high right now. It's going to cut down all the way to 50. So that 50 drop, that should actually help us because of the nature of the trading we have here. And you'll see that the volatility numbers that get projected are based on the moneyness and everything else that goes into calculating the value of these options. So in this case, if we bring this existing volatility down to, let's say, 30, we can see that this cuts down the volatilities that we have here because they are relative to the amount of change in the volatility for that spot term. So if we bring this up to 45, a little more volatile, we'll see higher volatility expected in the target for these. And we can see here all the numbers as they change. And you have the ability to come in and change those. Of course, you can change the underlying price manually. Like maybe we think Microsoft's going to recover to 315 and the volatility will probably stay where it is. That'll help us out here. And we can also see things like, for example, the book margin requirement. So in this case, because we're targeting a date, let's go back to the 18th, which is between the two expirations. So at that point, we can see that we have volatility now because this will still exist. This dashed line usually means that the option will have been, will have either been closed or it's past its expiration one way or another. So at this point, we have this position here, this long position was closed out. The short position is still open here, and that leaves us with a margin requirement, which we can see as a change. We can follow that all the way down to the bottom and see currently we have no margin requirement, but the projected margin requirement is going to be a little over 3,600. And so it's the kind of thing you can plan for if you have a position where you might have a lot of margin to be worried about to ensure that you're going to have the kind of cash you need on hand. And of course, those shortcut buttons, so you can jump from here and go, for example, to GameStop and say, maybe I want to tweak some of these positions and, kind of roll things out or do whatever it is you want to do to see different scenarios that might play out. So that's kind of the quick whirlwind tour of the stress tester. So next steps, you can check out the latest docs we have at docs.quantcha.com. We are evaluating some enhancements, so we could use some feedback if you have it. Things like additional presets that are commonly used, the ability to invoke expiration handlers like the book manager does. So instead of just cash settling an option, potentially having it apply the assignment against shares you hold, or even just letting it assign so you would hold shares after that, things like that. And of course, supplemental visualizations. At this time, we're not exactly sure what the best way is to provide things like alerts or warnings in the stress tester, because these are completely fictitious scenarios. So as a user, you would step in and set what it is and would presumably understand if you have a stock dropping 50%, that should increase the volatility and so on and so forth. So if you have any feedback, please reach out to us at hello@quantcha.com. And as always, good luck and good hunting.